think you're spot on. It's supposed to be a super Thursday, but it's been also very well telegraphed to market for weeks now that those central banks will downshift the pace of tightening while being hawkish because the job's not done. There's long ways to go, according to Jerome Powell. And to a large extent, it's the same situation in many other countries, including the UK, the Euro area, or Switzerland. The big difference, obviously, is that in the Euro area, in particular, and in Switzerland, we're starting from a much lower level in terms of policy rates. We're getting closer, I think, to neutral level also, with the ECB likely to hike by 50 basis points today. To 2%, but there are also some differences and a number of things that make me a little bit more worried about the press conference from the ECB and President Lagarde this afternoon, who could be a little bit more hawkish than expected. First, because the recent news we've had are consistent with a milder recession, if at all, a contraction in some countries in the Euro area during winter, so better news than expected. Inflation has peaked, but it's much higher than in the US. It's stickier. It's more persistent in a way in terms of the second round effect on wage growth in some countries, including Germany. And also, I think the ECB has not even started other kind of normalization, including, as you mentioned, the balance sheet. So you have some tools, including my last word here is if the ECB watched the press conference of the Fed yesterday, they might be a little bit uncomfortable with the market reaction, taking it in a more benign way when the ECB has a lot more tightening to do. So that makes up for an interesting press conference this afternoon, I believe.
Yeah, absolutely. Just to switch back to the Fed, I'm intrigued by what your analysis is on this and ultimately how the skittles fall, because the S&P 500 is now on track for ultimately its biggest three-month gain since the second quarter of 2020. So we're up 12% or so since the start of October. If you look at the Dow Jones Industrial Average, some of the technical analysis that I was getting into my inbox overnight was pointing out the 50-day moving average now back above the 200-day moving average, which is seen as an encouraging sign by the technicians. All of this suggests that we're getting easing financial market conditions that is somewhat undoing the Fed's work. Is there a reckoning, and if there is going to be a reckoning between the market and Jay Powell's aggressiveness, when does that come?
I think so, because at the moment, we past the peak of inflation. That's, a huge difference in terms of the direction of travel. We've passed, we've gone through so much uncertainty this year. The drawdown in equity markets have been over 20% in the S&P, 30% in the Nasdaq. It's been a terrible year. So this you might argue it's a kind of a bear market rally kind of pattern that we've seen. The technicals are indeed, as you said, more mixed. The positioning was probably, consistent with some kind of bounce back at some point. As soon as you get the first step, which is the peak in inflation,